trading techniques, the concepts of the blueprint. If you have any questions about that, the married put approach for the 13 different income methods. Well, I just want to remind everyone, we just launched the end of year special bonus offers for the blueprint. The blueprint is the full course. It's all electronic copy on our educational portal, learn.powerop.com. And if you purchase the blueprint before December 31st, you'll get various different bonuses as well. You'll receive a coupon for a $59 discounted rate for the Fusion subscription at Radioactive Trading, where you can follow along with Earn in My Married Put Trades. You can actively go through various lessons that help accelerate the learning curve of the blueprint. You'll get one of our Mastery Series videos, the Forts video, for free. That's an $89 value. You'll also get an additional FIST video, the 4 Insider Secrets of Trading, $29 value. Access to the Quick Start Guide and members-only content as well as a blueprint owner. 1 month free of PowerOptions on our $120 service. And of course, remember, it's electronic access, so you get instant access. You don't have to wait for shipping. You don't have to wait for any of that. No waiting for arrival, no bulky binder to carry around. It's always at your fingertips. You also get email support for free, phone support for free, explanations or clarifications on any of the concepts, how to start putting the radioactive trading principles to work for you with controlling risk first and getting income to lower that risk and potentially bulletproof the trades. Also, a 30-day money-back guarantee. If you're not satisfied with it, you don't see how it's going to help you in your portfolio investments. By the way, about 60 to 65%, I think, of people who have taken the money-back guarantee, and that's only probably about 12 or 15% total of the people who buy it, but 60 or 65% of those that send us an email and say, hey, I don't think it's going to work for me. The market's really strong. I'm going to go to try this different technique. They actually come back and repurchase the blueprint because it didn't work out for them. So that's something to consider. But anyway, that's the radioactive trading technique, the married put approach, where you're going to see some of that in action a little bit later in this presentation. But end of year special bonus offer. Purchase the blueprint before December 31st. You lock in these 8 bonuses. And of course, you have access to controlled risk trading and income methods as well. And while I'm on that note, let's just talk about some of the things we did today. Ernie actually made 3 adjustments today on his fusion positions on Bros, and some other ones as well. And what we did today, Planet Fitness, of course, stock is at 111.38. I did set an alert at 111, but it triggered. But I was doing that just as a precursor earlier on 11.25 when I sold my 115 call for 225. We let that one expire worthless. So we're going to go ahead here. I'm going to go next to my call in my Power Options portfolio, tracking the position so I can see currently the total return on the trade, liquidation gain or loss, expiration gain or loss. Here's the one for Alamos Gold. We're going to talk about that one, a little fun one in just a minute, what I'm going to do with that one. And for Planet, though, we had our call expire worthless. Let's go ahead and go to position actions. And we're going to go ahead and I'm sorry, I was on the right leg there. Sorry, position actions and closed leg. This option expired worthless, or 115 for today. No, this is going to expire at 0. Sorry, I don't know why. It grabbed that as a weird midpoint. And just for views, we don't consider the commission fees here. So let's go ahead and submit that. Now I'm back to a standard married put on Planet Fitness. Stock here, and we're up 3.5%. Got to do some things to control the risk. I'm holding a 105 put, and the stock's at 111. So what I'm most likely going to do on this position on Monday is bulletproof the trade. I considered doing it today, rolling out the call to the January 115 and moving up the put to the 115 strike with the stock at 111. But I think what I'm going to do here first, based on what we see on Monday, is we're going to go ahead and roll our May 105 put. We're going to simulate that by selling to close it here in the profit and loss chart. So going to get about, let's do midpoint just to keep it simple, folks. We're going to sell to close that at 650. Now I'm going to lose about 550 on this put. I made this adjustment to the 105 put when the stock was at around 101. I think it was around 150. So we've gained 10 points of the stock. Thank you, Jim. Yep. I want the contract size to be that. We're going to use the midpoint of 650. So I lost 550 to gain 11. Okay. So now I have shares of stock at 107.38, trading at 111. I've got some unrealized gains on this position, but I want to continue this trade. So I've got that May series here on the married put. So I'm going to use income method number 4. I'm going to buy. Now I'm going to move the put up, my second working asset. There are 4 income methods of the 13 or 14 different income methods where you can manipulate the put option in the married put approach, following the rules in the blueprint of radioactive trading. And this one is one of my favorites. What am I doing here? I'm selling to close my put that's now out of the money. And again, we're just going to use midpoint to keep the math simple. I'm selling this at 650. And I'm going to buy a higher strike put at $11. So again, we just saw that my new cost on the stock itself, if I sold to close this put, was going to be around 107. If I add another $11 into this trade, that's going to put me up at 118, right? On a stock trading at about 111. But remember, I'm taking 650 back from something that was already factored in to the total cost. I'm only increasing my cost basis by 450. So I'm getting 650 back, paying 11. I'm increasing my cost by 450 to what? Get $10 of a higher guaranteed exit from 105 to 115. I'm paying 450 to lock in 10 points of guaranteed exit profit. Where else in the market can you find that as a guarantee? Where you put in 450 to be guaranteed to get 10 more back than you started with. That's the power of this income method, and that's the power of the radioactive trading techniques. So let's go ahead. We're adding that in. We're going to buy that at the midpoint I mentioned of $11. We're paying $450. This 12 was already calculated into our effective cost per share after other income methods. We're going to get $650 back. We're going to pay out 11. We're paying $450 out of pocket to gain $115 from 105 to gain 10 points back. Not quite bulletproof, but I take my risk down to 2.9% from where it was at about 7%. But I still have 147 days to go. Stock's still trading at 111. I have those other 13 income methods I could do. What if right now I didn't roll it as I mentioned? I'd send out a brief to our Fusion subscribers at Radioactive Trading saying, hey, I could have just rolled straight out to the January 115, got another $2 or $2.10, bought my call back for $5 and rolled it here. But if the stock continues this movement upwards that I've been seeing, and it goes to 112, 115, 117, that's a high expectation, but if it does that sometime next week, the 120 call would be worth $2. But let's look at that again. I took my risk down to $338 total on the investment based on my cost basis, other income methods done. I did lose on this put. I agree, I lost $550 on this put, but that was already factored into the original cost and the original risk of around 7%. Now, I'm going to sell this asset that's still 147 days out of the money. So this whole 650 is time premium. I'm buying a 115 at $11. With a stock at 111.13, that means 38. I'm sorry, I said 13. 111.38. This 115 put is 362 in the money. So the time value I'm paying for this slightly more in the money option is only about $70.32. $7.38, right? Because the rest of that $3, excuse me, is 62 cents is the intrinsic 115 to 111.38. So I'm almost even with what I'm getting back on the time value here, not quite, but I'm getting $6.50 back, and I'm really only paying, yeah, well, it's closer to $7. Yeah, about $7.62 is what I said, right? $7.62, folks. Yeah, check my math on that. $7.62 in extrinsic value. But what I'm really doing is paying only $4.50 to get a $10 higher guaranteed exit and reduce the risk down to $3.38. By the way, at this point, this put doesn't go to zero. On Monday, I could sell it for 11 or 11.05, depending on where the stock is. I haven't lost any money yet. It's retaining its value, just as you buy a long call. I'm not down $3.38 right now until expiration unless the stock moves up to $118.38. That break even's only at May expiration, 150 days away. What do we do next? Hey, what do we do next? Well, let's go to January and let's reduce that $3.38 risk by $2, $2.10. Let's go ahead and do income method number 1, a simple thing discussed in the sketch, the free white paper at Radioactive Trading. Maximum risk for the next 147 days is only down to 1.1%. Profit at 6.2%. Does tail off at the end if the stock exceeds my expectations, much like a calendar spread. But in 3 moves, what did I do here? I took a position which did have a controlled risk of about 7%, down to 2.9%, manipulating the second working asset, the put option. It's not just buy the put for protection and it disappears, like when you buy insurance for your house or you buy insurance for your car. You say, oh, I'm throwing money away on this. Yeah, until you need it, just like in the stock market. You insure all of your assets. The bulk of your portfolio should be insuring your stocks with the controlled risk position. Now, by using one of the various income methods, we've reduced the risk down again to only 1.1%, leaving some upside for some further profit potential, but knowing I have many different ways to manage this, just like you do in a covered call, and just like you do in a calendar spread, many ways to manage this discussed in the blueprint. Even though I have sold the call, which does cap my upside gains in this situation, but we've reduced the risk by 5.9% in 2 moves after allowing our call to expire worthless. That's the power of the income method. Sometimes, yeah, what happens when the stock exceeds your expectations? Income method number 1, the simplest thing. We enter this married put with 150, 200-day output option. Control risk to single digits. What does everyone say? Warren Buffett say, all of the market magnets. How do you be successful in the market? You cut losers short. You let winners run. This is a guarantee. Better than a stop order. Better than a trailing stop. It cannot be violated. I own the right to force someone now to buy my shares of Planet Fitness at 115. If it tanks down as it did 4 months ago, 5 months ago, it tanks back down to $89, $90 per share, even with a cost basis of 118 or 11,838 for 100 shares. I'm guaranteed to get 115 back, or 11,500. Risk of only 2.9% in the worst case scenario. Unlimited upside profit potential, and as you just saw, availability to reduce this risk by more than half, doing a common approach of selling a call or other approaches.